Welcome to the Market Frontlines. I'm Lyndsay Malchuk. Critical metals are no longer a quiet corner of the market. They're the battleground for control, technology, and global leverage. Now, whoever controls these metals controls the next generation of power. And few have tracked that shift with more precision and more edge than Christopher Ecclestone, principal and mining strategist at Hallgarten Company. Christopher, it's great to have you with us. Welcome.
Thank you.
Let's start wide here. The term critical metals has exploded into every political speech and investment deck. Yet the definition keeps shifting from your seat at Hallgarten. I would like to know, which metals are now truly critical and not just on the paper, but in terms of actual scarcity, security, and economic leverage?
No, you're absolutely right. There's been criticality inflation as politicians and promoters have got on the bandwagon and said that whatever they have or whatever is in their constituency or their province or country is a critical metal. And it's not the case. Because for me, criticality is, do we have enough of it when the bullets start flying that we don't have to rely upon the product coming from the other side who are firing the bullets at us? And so thus, if one sees that potentially, say, the Chinese are the biggest, longer-term threat militarily, are you free of the Chinese supply chain or not? And, we see a lot of confusion, people saying that niobium is critical. Niobium basically comes from Brazil and from Canada. Scarcely any of it comes from China. In fact, China is dependent upon particularly Brazilian niobium. So it's not a case that just any metal that you don't have yourself is actually vulnerable, because it may be in the hands of friends or relatives, so to speak. First we had the first phase of nationalism, which was, do we have it ourselves? I think we moved into a more mature phase now where people are saying, do our allies have it? And that's particularly the case with Australia warming up to the US, or the US warming up to Australia, where Australia has a lot of these metals. The US, of course, has Canada on its doorstep, and Canada has a lot of these metals. Though, of course, because the friction between Trump and Canada, he doesn't want to admit that he's dependent upon Canadian critical metals. But basically, the US is. There are some things that the US does not have that it needs. And so it is ultimately dependent upon the comfort of strangers to get its hands on some of this stuff. And, the big wake-up moment has been this issue of, some metals are totally or almost totally under the Chinese control. And this is what I would really tick the box as being a critical metal. If it falls into that category that you can't get it, except by begging the Chinese, then you've got a problem.
Well, let's push further with the governments. I mean, they're rushing in to secure ground. So we just saw El Monte Industries step up with its Montana tungsten acquisition. That news just dropped. The first serious U.S. tungsten play in decades. So is this just a one-off, or do you see it as the start of a larger Western re-entry into strategic metals? And in other words, is this the resources version of the mega shift, a deliberate move to make America and its allies resource independent again?
Yeah, that makes for a rather long acronym. But yes, it is true. But the thing is, and this is what legislatures, national leaders, and the public have got to wrap their brains around, is that to be resource independent, you got to pay more for the product. Tungsten is a great example, as you mentioned there. I've covered tungsten for 15 years, and it's been a thankless task. The companies in the space were not making money. Most of them got vaporized after the price dropped in 2013. And the price, frankly, pre-2013 wasn't all that great either. But it just went down to levels where it was totally uneconomic and shut down. To sustain, it's all well and good for governments to run in and start funding these things now, because they've got a war in the Middle East, and they've got a war in Ukraine, they've got a bit of international tension. but you've got to maintain that support for the metals. And we saw in the US in particular, really from the 1980s onwards, that not only did they stop adding to their strategic stockpiles, they took this idea of the peace dividend after the end of the Soviet Union that we don't need to spend any money on this stuff anymore. And so, they weren't stockpiling. That meant the prices collapsed. The mines collapsed. The companies that did it collapsed. Enormous skill sets and processing sort of flow charts and flow processes disappeared. The US has not had any tungsten production now for a few years. So it doesn't have really a tungsten supply chain, though it does have end users of tungsten basically be mine most of their product from the Chinese. So you got to rebuild the whole thing from scratch. But to do so would be a total waste of time if in 5 years from now, peace breaks out and they say, oh, we don't need to spend this money anymore. And they withdraw the support for really the higher prices, because Chinese dominance has come since the 1980s basically via predatory pricing, by making their product the cheapest in the world, even if they made a loss doing so. And so that predatory pricing can very much return. We've seen that they've played with the rare earth price since 2012. They've played with the lithium price a few times. I predict that they're probably going to play with the antimony price and the tungsten price at some point. But governments need to hold their nerve when the prices retreat 30% and say, we're going to continue with the strategy of being self-reliant, rather than just say, oh, it's cheap again. Great. Game over. And that has been the problem on and on, where governments have just gone for the cheap alternative, which is buying from China.
Well, that leads me actually straight into the next question then of who can actually execute here. So most juniors talk big about critical metals, but Almonty, I'm going to bring it back here again, has managed to combine capital strength, proprietary tech, and real actual mining experience. So I know that there's, the risk that's involved in that. In a market now full of so much noise, what separates a serious critical metal operator from a marketing story? I mean, what should investors look for to tell the difference between a company that can deliver supply and one that can only deliver headlines?
Well, my belief for a long time has been, and I've spent time doing these metals when they weren't profitable to do, is that my mantra is small mines for small metals. Many of these metals don't create a pit that you could see from the moon. They are essentially niche products, and the mines should be niche. We saw, particularly in the first rare earth boom, gigantic sized projects that were oversized, way bigger and way more capex intensive than they needed to be. And ultimately, when prices go down, the bigger the mine is, the bigger they fall. The losses accelerate, etc. So for things like tungsten, antimony, rare earths even, the mines should be smaller and the capexes should be smaller. And we shouldn't fall prey to the obsession in some markets that mines have to be bigger and bigger and bigger. Because in the tungsten space in particular, most of the mines are not large. The mines that have operated in Spain and Portugal, which is the classic two tungsten countries, have been small. The mines that used to operate in the US were small. And so we need to return to the idea that we create mines that are right-sized for the demand. And oversupplying a demand is going to be the next sort of crisis that we're going to see, not so much in tungsten, but particularly in rare earths, where there are way too many projects, and the projects that are being mooted are way too big. If even a fraction of those get built, we will have massive oversupply of rare earths, which will send prices down no matter what the Chinese do. We'll be sabotaging ourselves in those contexts. So it's very important to make the mines right-sized. The Almonty deal looks like it's a good size. Almonty have got a lot of experience in doing tungsten mines in Spain. and they built one just now in South Korea, which is a more substantial one. So they're able to mix and match between big and small and niche and demand, where the demand comes from, and that you have to be in touch with your customers, and you have to make the amount of output match what the demand is, not just come up with some gigantic plan to produce half the world's rare earths, and then find that that there are 6 other people doing that. You end up with 3 times more product than the world actually needs. And I do believe in rare earths we're heading that way, and we see already in lithium massive oversupply. So it's right sizing. It's got to be the mantra.
That's such a great insight to have. I want to broaden the lens here just a little bit further and bring it back to, China holding the dominant in tungsten and rare earths and really much of the refining infrastructure for critical metals. Now, if I flip that, the West seems to be really waking up here to strategic vulnerability, if you will, of that dependence. So from your global view, Christopher, how are North America and Europe responding? And is it actually fast enough to matter? Could we realistically see Western-led metals ecosystem emerge in the next 5 years? Or is there still too wide of a gap here?
No, we're definitely seeing it happening. It's happening in the US. There's this iconoclastic Trump regime, which, say what you might about it, it sort of sees the goal and it seizes the goal. Europe is still in the total grip of NIMBYism. It cannot get out of its own way. And it has a sort of like an almost neo-colonial approach that, dirty industries, and mining doesn't have to be dirty, but dirty industries, whatever they define that as, are okay if they're in Africa and Latin America. We don't need to have them here in our pristine, fields of Germany or Austria or Italy or wherever it may be. And that is totally erroneous. Australia and Canada, of course, are used to building mines, and they're seizing the opportunity. Brazil, another one that is, very dynamic in critical metals. The EU, though, is much talk and virtually no action. And they're hoping that someone else will do it for them. Obviously, when it comes to a scarce commodity, say like antimony, other countries may get themselves into a state of self-reliance. But why should they produce more than they really need, particularly if they're producing it at a loss? And when this is where we come back to the issue of subsidies. The US could subsidize tungsten, antimony, rare earths, and produce enough for its own needs. Why should it subsidize producing more than its own needs to bail out the EU from the EU not doing what it needs to do to actually become self-reliant itself? And so ultimately the EU will sink or swim only on the basis of it breaking out of, sort of like a comfort zone that they're building around themselves, that is sort of intellectually lazy, and paying too much heed to NIMBYist type of philosophies.
Well, for those that are watching on the capital side of this equation, then let's look at that if we can. Critical metals used to be a niche play, but the capital markets are, as we said, waking up. So between defense applications, EVs, AI hardware, and renewable tech, where do you see Christopher Capital moving first? I mean, which metals are likely here to lead the next investment cycle? And could tungsten resurgence be a signal of what's coming for the rest of the sector?
Yeah, I think the catalyst here is that the markets still are obsessed with their old flavors. When you scrape away the critical metal element, you get back to mining markets that are, basically love their gold and their silver. Now there's a need for critical metals, but investors feel, why should it be me that throws the first dollars in? Because particularly over the last 15 years, people have thrown money at quite a number of spaces, like the rare earth space in particular, where billions were lost in 2012. And those people feel, well, why should I be contributing again? It's like a bad charity that you actually contribute to the charity and then you don't actually see anyone getting benefited from the money. So what's happening this time around is the government is the catalyst. So government will see, promoters will create a vehicle. They will discover an old mine. They will get it into a relative state of, presentability. But still, the equity investors, when these companies go and say, we need 10 million, we need 20 million, we need 100 million, are not biting. But all you get is then a government coming in and saying, here's a $20 million grant, or we're taking a strategic stake, as we've seen particularly the US government do, and to a smaller degree the Australian government. And then suddenly everyone piles in. They feel that there's a comfort level that comes from the fact that the government is leading the charge into the space, and that gives them a degree of comfort that otherwise in micro caps, with micro mines, micro metals, it makes the investors queasy. And so the government's sort of stamp of approval on the a project or a company suddenly liberates it from the chains of microism, and and then it becomes respectable to throw money at it. To some extent, it can even result in overvaluation, as we've seen with MP Materials, the rare earth champion of the US, where a bit of money being thrown at it by the US government and some subsidy guarantees have meant that the thing has become massively overvalued, probably to the expense of other players in that field. So we've got to be careful that governments, by backing one horse, don't leave all the other horses to starve to death.
This is all the time we have, and I would love to keep you on further and just really continue this conversation because it's so full of insights on what's coming down the pipeline. If you could give our audience 3 key takeaways from our conversation today, what would they be?
That real criticality comes from a definition is that it's a product that China has a grip on. If China doesn't have a grip on it, it's okay. You can work it out somewhere else. Many metals that look like they've got China dominating them at the moment, the West has a lot of them. It's just that it's in the ground. And the third thing is that government support will go to a handful of names, but the selection of companies that have these metals, maybe have more attractive projects, in fact, is far broader than just the ones that will receive government largesse, which may receive them because they're bigger or whatever. But, there's 3 factors. Does China dominate it? 2, does the West have it? Because in many cases, China doesn't have it. China, buys in products. And the third one is, a government's cherry picking, and, you got to look beyond just the companies that are getting government largesse.
Perfect. So brilliantly put. I'm sure that we're going to have you back for many more conversations. So thank you again for joining us.
Thank you very much.
Again, that was Christopher Ecclestone, Principal and Mining Strategist at Hallgarten Company. Now, for more insights, visit them at Hallgarten, HALLGARTEN and keep an eye on Almonte Industries trading on NASDAQ under ALM and TSX under AII. I'm Lyndsay Malchuk. This is the Market Frontlines, the place where investors come to see what's really at stake. We'll see you next time.